Hi, my name is Alan from LLB Property. Welcome back to my YouTube channel. Singapore private shophouse, known for their rich heritage, architecture charm, and commercial functions, have grown into one of the most sought after asset class in the property market. These pre-war buildings, often conserved by the Urban Redevelopment Authority, are primarily located in prime and city fringe districts such as Chinatown, Kampong Glam, Tanjong Pagar, Joo Chiat, and Little India. With limited supply and increasing investor interest, private shophouse has experienced significant capital appreciation since 2019. However, the soaring prices have also raised concern about their implication, particularly on the commercial tenants like F&B businesses. This video will examine the performance of private shophouse in Singapore from 2019 to 2025, with a focus on price trend, investor interest, and rental dynamics. You also explore whether the sharp increase in prices has contributed to higher rents, and subsequently leading to the closure of many small and business-sized F&B outlets in recent years. Private shophouses are typically 2 to 3 story buildings, combine residential and commercial use. Most are zoned fully for commercial purposes, which allow ground floor operation such as retail or F&B, while upper floors may sometimes be used for office, storage, or even short-term accommodation subjected to approval. Shophouses are usually sold under single land titles and come with freehold or 999 years leasehold tenure, making them particularly attractive to long-term investors and wealth preservation buyers. There are also some on 99 years leaseholds. With around 6,500 conserved shophouses in Singapore and only a fraction available for private ownership, supply is tightly limited. This scarcity has fueled strong demand, especially in the post-pandemic years. Before the COVID-19 pandemic, the private shophouse market was already showing signs of strength. In 2019, investor sentiment was upbeat, buoyant by low interest rate and Singapore growth as a financial hub. Well-located freehold shophouse in District 1 and 2 transacted at approximately 4,000 to 10,000 per square feet based on land area, while those in city fringe area like Little India and Geylang were priced close to 3,000 per square feet. Very cheap in today's standard. The onset of the pandemic in early 2020 caused a temporary market pause. Uncertainty, travel restriction, and economic slowdown led to a dip in transaction volume, with some price correction, especially for older properties in less central location. However, the downturn was short-lived. By the second half of 2020, the private shophouse market rebounded as low interest rate, pent-up demand, and a flight to safe haven drove renewed buying activities. Domestic investors dominated, with some foreign interest from regional family office. By end 2020, price for prime freehold shophouse had largely returned to pre-COVID level, ranging between 7,000 to 11,000 per square feet in Telok Ayer Conservation Area, while fringe areas such as Little India Conservation Area saw prices inch upwards above 3,000 per square feet. Many sellers took the opportunity to cash out and exit. On hindsight, have they exited too early? 2021 and 2022 marked a golden period for private shophouses. As global capital flowed into the property market, Singapore emerged as a choice destination because of its stability, rule of law, safe haven to park those extra funds. This is especially so when shophouses are exempted from additional buyer stamp duty and seller stamp duty if they are fully zoned as commercial entity. ABSD is still payable for the residential component for those that are zoned residential on the upper floors. Foreigner and entity are also eligible to own them with few restrictions. Transaction volume and prices surged. Institution players, family office, and ultra-high net worth individuals snap up conserved shop properties in heritage districts. Some headline deals include 5 adjoining shophouse at Club Street sold for 25.9 million to ABR Holdings. Even Alibaba founder Jack Ma's wife joined in the party by acquiring shophouses in Singapore, Tanjong Pagar at up to 37 million. Shophouses in traditionally overlooked areas like Geylang and Jalan Besar saw price increase. Let's take a look at Little India again to get a sense of how much prices have spiked. You see, don't anyhow say I anyhow talk. If you want to find those in the 3,000 per square feet range, sorry ho, they are easily transacted at 4,000 to 6,000 per square feet. In terms of overall quantum, they fetch around 4 to 5 million each. This is way beyond the 2 to 3 million range back in 2019. Overall, from 2019 to 2022, prices of private shophouse rose approximately 30 to 50%, depending on tenure, location, and condition. There is this saying, as long as you touch anything after the pandemic, they will all turn into gold. By 2023, microeconomic headwinds such as inflation and rising global interest rate begin to impact investor sentiment. Transaction volume slow, but price remains sticky due to the scarcity of supply and strong holding power of owners. Owners have started to ask higher and higher extra retirement funds to make. Why not? However, things start to cool off after tighter regulation on family office after the largest money laundering cases in Singapore. Do you know, I attended the court hearing before when it was open to the public. It was very interesting to see who are representing the public prosecutor on one side and the offenders on the other side. Here, if you have nothing to do, you can go to this website and search for the hearing you want to attend. It is open to the public. In 2024 and early 2025, interest revived slightly with the stabilizing of interest rate and renewed foreign investors' confidence in Singapore. Prime area shophouse continued to trade at 10,000 to 11,000 per square feet, while city fringe properties held steady at 5,000 to 7,000 per square feet. For shophouse owners and investors, it seems there are still good profit to make. This is still the Wild Wild West in the midst of the highly regulated residential property market. Obviously, the rapid rise in shophouse prices had a direct and significant impact on rental level. Landlords, after paying premium prices, naturally expect higher return. As a result, commercial rents for ground floor retails and F&B spaces in shophouse rose sharply, especially in sought-after neighborhoods. This escalation in rents has created a sustainability issues, particularly for small and medium-sized F&B operators. Many businesses already struggling with labor shortage, inflation, and rising cost of goods found it increasingly difficult to survive in high-rent locations. Many retailers have also highlighted that rising rental will make it almost impossible for them not to raise prices, and all these prices fall back to consumers like you. If they raise it too much, this will also mean losing customers and ultimately the viability of their businesses. It's not unusual that many small businesses are struggling to keep afloat due to rising rental. This also includes businesses in non-F&B trades. Sadly, it seems that raising rental is the easiest way out. On this part, I'm very concerned that a huge part of our F&B heritage is going down memory lane very soon. Look like the only option for me is to go to nearby Malaysia to enjoy my comfort food. Since they have a lower cost and lower rental, that is why Malaysia can still preserve a huge part of their food culture. This is something that I admire them for. The performance of private shophouse in Singapore since 2019 has been nothing short of impressive. Prices have risen sharply, driven by a potent mix of limited supply, hot money, and liberal regulation. These properties have become both trophy assets and well-preserving instruments for high net worth buyers. There is this saying, cannot afford a GCB, there is still the private shophouse to play with. However, these prices has not come without consequences. The ripple effect have led to higher commercial rents, directly impacting small businesses. Many have struggled to keep pace and several have been forced to close, raising questions about the long-term sustainability of the shophouse rental ecosystem. In the coming years, the challenge for Singapore will be to balance heritage preservation, investor interest, and commercial vibrancy. If rent continue to rise unchecked, the character and vibrancy of many shophouse districts may fade, replaced by deeper pocket corporate tenants or vacant shopfront. A good example is Chinatown. This will undermine the very charm that makes shophouse desirable in the first place. Ultimately, while private shophouse remain a prized asset class, they also remind us of the tension between capital appreciation and the rising cost of living. A recurring theme that Singapore urban planners and policymakers may need to increasingly address. That's all. I hope you enjoyed this video. Thank you so much for watching.